Welcome back, guys, to Laptop Trader. Sorry for the beginning and ending of these videos. I had some software to cut and clip and manage my videos. For some reason, YouTube doesn't accept those, and I'm not sure why. But so we'll just continue on the old way. Again, this is Philip at the Laptop Trader channel on YouTube. Welcome back to our community. Email contacts laptoptraderphil@gmail.com. And this channel is for information purposes only. You can read the rest of that if you wish. Here at my house, it is almost Christmas time. Christmas cookies are coming out of the oven. So I had a few of those today. Start now by educating yourself on how markets work and finding out what is right for you. Invest in yourself and then invest in the markets. So first thing I want to talk about was this trade last month. I gave you guys some homework. If you wanted to take that on, that was up to you. But I sold half on this gap up on this cheap stock. So I made good money on a cheap stock. That's the bottom line. We had an entry here by this line, target, stop, and my 2-to-1 target was in this area. And then it gapped up, so I took profits. And I had some questions for you guys about what was my return on investment, how much did I gain as far as R value goes. So if I sold the whole position, I would have had 7.4 R gain. I sold half and I gained 3.7 R, and I'm holding the back half and see if anything else happens with this stock. Nothing has happened with this stock since that time. It's just kind of flatlined, but it hasn't dropped or went anywhere. But just on that trade, I had over 40% ROI on my money. I made $96 on a cheap stock. I only had 236 invested. I only had $26 of stop risk. So the reason I'm holding half is because what if it gaps up again in the future? This is the next big thing. We never know for sure. And but now we only have $118 overall risk. And even if I don't have a stop, I've only got I can move my stop to break even, so basically it would just be like a free trade at this point. And I had 100 shares. So now I have 50 shares, and if I move my stop to break even, we could just let it ride, right? But the other thing I want to show you guys with this type of trade is the fact that stock price really doesn't matter in trading. What matters is risk and trade and money management are more important. So in this 30 for 30 challenge I've been doing, which isn't over yet, I think that's going to clearly demonstrate that to you guys. I'll show you the spreadsheet on that here in this presentation. But this is another one that I had for quite a while. NuScale Power, symbol SMR. And this, at the time I entered, was, I believe, in this area, maybe $18 stock. So in this one I sold half up here at 31.43 at NuScale Power. So I still have the back half of that trade too. So, so now I showed you a $4 stock and an $18 to $30 stock. And so I just want to show you guys that if you're ever intimidated by prices of stocks, you're thinking, well, I can't trade stock because, stocks are too expensive. Well, that's really not the case. So let's go to quickly. That's probably not the right spreadsheet. I'll try to get the right spreadsheet up for you guys. Let's see. Let's go to sheets. And we've got, here we go, 30 trades in 30 days. So several I've exited. Some of these I've sold half. I also want to put this one that was really not part of the original challenge that I held for quite a few months. The stock just didn't really move, and finally it moved. But just on that one stock, again, we made, what was it, $96? That has to be put in my P&L there. But that nice large gain takes care of these little small losses. So far that challenge is going okay. Some of the other ones we entered recently were Zoom, Village Farms. This one I know stopped out. American Superconductor. ELF looks really good. ELF Beauty. So these are all different price stocks, right? Well, $135 stock, an $86 stock, $1.50, $1.60 stock, 88-cent stock. So it doesn't really matter the price of stock. You just have to become comfortable with trading for and just work some sort of trading plan for yourself. I also put in here no trade on this date. So that trade was on a Friday. I had a really busy week at my normal full-time gig. And so when I came home that Friday morning to trade, I had all the best intentions to trade, but in the first hour of the trading day, it didn't seem like there was any viable trades to take. Like it just seemed like the market wasn't conducive to trading, and maybe I wasn't in the right mindset. So I decided just not to trade, and SOH stands for sit on hands. Okay, I want to let you guys know too that if you're a trader, that's okay. It's okay to not take a trade, because sometimes we get hung up and I got to make money. I got to make money. Sometimes the best thing you can do is just step back, catch your breath. Maybe you had a long week or long day or whatever, and just don't trade. Okay. So now let's talk about. I gave this month more of an investor presentation, but I want to remind you guys, if you're not an investor, if you're just a trader, I think you're probably leaving some money on the table. You should be considering long-term investments too, in the total stock market or the S&P 500 or the NASDAQ or some combination of ETFs or mutual funds, because this is a chart of the S&P 500 index since 1980, right? So looking back in time, the S&P was down here around the $100 area, and today it's at 6,000, right? So many of you weren't born then, but that's okay. There's been buying opportunities all along the way. This was a big buying opportunity. There was a huge buying opportunity in 2008, 2009, and look at all that growth since the great financial crisis. It's just been crazy. Even after this 2022 bear market, that was pretty scary, right? This was, I believe, COVID. This was before that, and it just seems like the market wants to go up. If you're not a long-term investor, that's one thing I would encourage you guys to do also. Not just trade, but be a long-term investor in the market, because it's really easy to make money doing that. You just have to set up your initial account, fund the account, get involved in a total market index or something like that, and contribute some money every month, and watch your money grow. It doesn't really get any easier than that. So that was the chart I shared that with my investors this month also. I want to share that with you guys, that don't forget to invest. So let's get to what we normally do. Let's get to our market review. Okay, so this is a 5-year monthly chart of the S&P 500 SPY ETF. Just made a new high this month, right? Just made a new high. So let's go to a weekly chart. Here's the weekly chart. We had a new high last week, and then this week we had basically just an inside week. Okay, closing the week at 604.21. After this breakout here, over this area, we had this breakout, moved up from about 582 to 604. So over 20 points, a couple weeks there since last month. Qs on a weekly basis. We've got new high last week and then inside week this week. So same picture pretty much of the Qs, uptrend, right? Russell 2000, ETF IWM, right, uptrend. New high last week, inside red candle this week, so just down a little bit on the week. And basically same picture for the diamonds also. And the transports, very similar picture. So everything's still in this uptrend, long-term 2-year uptrend. And this week was just kind of a down inside week. Okay. So that kind of covers our major markets. Let's look at some other, what else did I want to show you guys? Let's check out our ETFs. Let's look at the other sector ETFs. Let's look at that too. So this has made the news recently, right? Bitcoin just over 100,000 now. I'm sure you guys have seen that in the news. I am not a buyer or investor of Bitcoin for my own reasons, but if you are, congratulations. That looks really good. I think the VIX is probably near all-time lows. Yep, 13.8. That's in the low range of volatility. We have mid caps. And we had a pullback here last week and a half. But in an uptrend overall on the longer time frame. Same with small caps pulling back this week and last. What else we got? Let's look at the weekly. I kind of like the weekly chart better. Let's look at that. But so XLE, energy, not as good as the rest, right? I would say relative weakness versus the general market, right? You have this top, this big move. It looked like it was going to break out and it just completely fell apart the last 3 weeks. So energy does not look very good at this time. Financials still in a nice uptrend. It's been pulling back for 2 weeks. Let's see if it turns around here. It gives us an opportunity to maybe get on board financials with a buy setup. What else we've got? We've got XLY represents consumer discretionary. That is in a very strong uptrend here over the last couple months. Just made a new high this week. Getting a little bit extended up there, but what's extended can become more extended. So that is not really one I would get in right now because you're really buying at really high prices. And yeah, it could go to 250, but it could also pull back here too. So that's just kind of one to watch. Consumer discretionary. Healthcare looked like it was going to kind of made this new high here, and then since that time in September, it's just fallen apart. So healthcare looked very good going into the end of the year, and it is just basically gave it all back. We're back down to this area, and that is not looking good for healthcare. Technology is kind of, yeah, it's still in a bull uptrend. Just made a new high last week. Inside little candle there this week, but it's not super strong. It's just kind of grinding higher, right? But technology is an area where long-term investors like to go because that offers some great returns for the future. Utilities has had a positive year. The last couple months have been more of a back and forth here. The uptrend is technically still intact, but that is in question if this gives us another red week below here, below 76.78, closed at 77.64. So another point lower, and we're breaking this pivot support, and that does not look good for utilities. Although it could just bounce back and forth for who knows how long too. That's another possibility there. Industrials, this is related to the Dow. It's just a bigger basket of industrial stocks, but that has been pulling back over the last 3 weeks after it made a new high. So that looks like that's been under some pressure to sell, although it's still in an uptrend. Materials, another sector that looked very good here going into September, October, and has since then sold off considerably. This uptrend is basically broken. I don't like it. It couldn't even get up here. Couldn't get any momentum going up here. Now it's sold off below this area. That looks bearish to me in the materials. Communications has been maybe the strongest sector all year. It just seems to keep going along. It clearly respects this 50-period moving average, which is not support, but a lot of people will buy that area. and it's new high this week in communications, maybe led by Google would be my guess on that. So that looks great. If you're in communications, I would just hold that. And consumer staples look good since late last year, and has since shown some real weakness here over the last couple months. This looks like it may roll over too. It could turn around, but you know, it had this uptrend, came back here to kind of like a minor support area, popped up in a very weak way. So that looks in question as far as consumer staples. So that would be one I would probably not be looking to go long unless something changed. And real estate. Didn't have the greatest year, but since April, May, looked very good. But last couple 3 months, it's been under pressure to sell. Also, more of a back and forth sideways trend here at the highs. That could go either way. That could roll over and go lower below this area, or it could turn around and maybe test the highs again at some point. We just don't know. But real estate is kind of neutral right now. Let's look at what else do you guys like to see. How about interest rates? Interest rates have been coming down steadily, so that's probably good overall for borrowers. And the longer term interest rates, 10-year note, a little bit different picture there, right? So 10-year was made a low at 360 area, came back up to 4.5, and then kind of almost like a buy setup. That looks like longer term interest rates could go higher. So that's a little bit of a varying picture between short and long-term interest rates. That is interesting. I'm not sure what that means totally as far as for borrowers. Could be good. Maybe this will roll over too. Who knows? Because it's kind of had a high here. Came down, made a lower high, and another lower high. But this looks like this could be going higher. Like long-term interest rates could be going higher. What does that mean for the bond market? That means bonds are still in this sideways trend, and that actually looks lower, like higher interest rates would push bonds down. So this buying opportunity in bonds is, that may retest here. We'll see what happens with bonds. That's interesting. Another area of interest would be semiconductors. That's a big topic on the news. That really led this past 2-year bull market, and that has been under pressure recently here since July of this year. It's not made a new high since July. It also hasn't made a new low. So we just have the sideways trend of semiconductors just going nowhere at this point. So looks like there's no major motivation to buy or sell semiconductors. It looks to me like there's more activity in other sectors. So not much to really say about that. That's it for that. Other thing we could do is, I guess we could talk about maybe what's in my other lists as far as possible ideas for this upcoming week and month. Let's see if there's anything on next month's list that maybe pops out. That could be a good opportunity for you guys. I'll try to give you guys maybe 3-4 ideas and see if we have anything. So that's immediate no. That doesn't look very good. That looks like I'd have to look inside what's in this. This is an ETF, but that made a big move up, pulled back, just kind of consolidated, and then we had this. After this consolidation, we had this big green bar on volume, but then it just went sideways. This does not trade a lot of volume, so I would say no on that, unless I really don't like trading that low volume stuff. That's a bio, no. No, that doesn't look that great. No, it's in downtrend. It looks like that's going to roll over. Badger Mater made a new high and then pulled back. This has been happening a lot where stocks have made new highs and then start pulling back here in this second week of December. There may be some buying opportunities this week, depending on how some of these stocks play out. This is just like sideways. Stock seems to not be going anywhere. Dollar Tree in a bottoming pattern. Came up on earnings, but then since it's sold off, that's just a watch. Clear One came out of this bottoming pattern in a pretty good way, but has since sold off. Again, that looks kind of normal, par for the course there. I don't like this where Oracle had earnings and then gapped down after earnings. That looks like, if you short stocks, it's maybe one to watch for a short. ClearSign Combustion looks like had a big move up. I don't like these large red bars, these topping tails, but then we had a bottoming tail on Friday. So this is one that's kind of starting. Price is starting to pull these moving averages up. This is a fairly cheap stock, so this would not be a huge risk, but you could take a trade over this area, maybe over $1.17 to $1.20. See if you could get up and make a new high. Stop under this bar. That's a possibility. And ClearSign, cheap company, so I would not overcommit to something like that. That doesn't trade a lot of volume. So we've talked about money management before. Tesla seems to be a big winner since last month, right? After earnings, just seems like the buying has just continued in Tesla. I think it's too far for me to get on board Tesla. This is definitely not. ABT. That looks terrible. That's like we made a new high, pulled up, gapped up, made a new high, and have not got anywhere near that since. That looks like that is going to continue to sell off. UPS has not looked good as of late. Done nothing since last month. Just kind of, actually has done nothing since September. So that was a big disappointment because this looked pretty constructive right here. And then it just sold off. Generac, again, this is a pretty common thing I'm seeing right now these last couple weeks. This sell-off in a lot of stocks this last week. That looks like downtrend. Intuit had a nice move up into earnings, and then since then has not retested this area. So that looks like just a watch. Manhattan Associates. I don't like this bar on Friday. After a new high, that looks like that could sell off. So no to that. No to that. I wonder right now too if this earnings season is having a big effect too. I'm noticing a lot of this too. Stocks being bought up into earnings and then selling off after earnings. So maybe just these end of the year earnings are just not good enough for expectations. That's a possibility too. That's a no. MGM, a casino. Again, had earnings, looked good in earnings, and then sold off. So that looks like that is not very good right now for a long. Home builder, no, I don't like that. Powell Industries, I don't like that. Signet Jewelers, again, gap down on earnings. Don't like that. This one looked like it could get going and then failed. I had a trade in this on SMCI over this area, and I think I got triggered and stopped out really quickly on that one. This one was part of my 30 for 30 challenge. I believe this day I got involved here, came up, and then the next day stopped me out. So that was not a good trade. Probably not the best chart, to be honest with you. Tingo Group, nope. VF Corp. So this one's looking a little bit different than the others as far as reaction to earnings. So this was in kind of a, you can tell by these moving averages, right? They're all pointing up. So into earnings, it was in this uptrend. Sold off into earnings, right? And then the day after earnings gaps up. Now to me, that is insider information. Is what I see. And that's what I see this a lot around earnings, where they wait for earnings to come out either that day or the next day, and then they either sell it off or they buy it up. So in my opinion, these major firms know going into earnings exactly what they're going to do. They don't wait for earnings to come out. They've got analysts inside these companies, studying these companies, exchanging information. They know if they're going to buy, sell, or hold. But this looks like this could turn out to be positive over the next month or 2 or 3. Buy up after earnings, new high. Since then, it's kind of sold off, but not in a huge way, not like the other ones. And now it's starting to be bought up again slowly. There's topping tails in here, so I don't like that. But they're still pushing prices higher, even with these topping tails. And now we've got like this red bar, and then it gaps up, closes like on a neutral day, gaps down with we've got another topping tail. Now this day we've got a little bit of a gap down, but there's definitely some buying pressure in this stock. I would not necessarily buy it right now, but I would see if we get some better looking price action over the $22 area. I think over 22. Let's look at a longer term chart. Let's look at 2 year. Let's look at a weekly chart on that. Yeah. So this wasn't a downtrend, and now it's made the turn, right? We've made a change in direction up, and they just paid a dividend, and you can see this kind of large bar on volume. See the volume? There's been a lot of volume recently, buying volume. Now it's just kind of doing this, right? So that's why I like it over that area. Over 22, I like it, and even more, I like it over this candle, over 2309. So that's a possible idea for you guys this month. VF Corp, symbol VFC. So I'll put that on my list. Let's put that on our watch list for this week. And let's see this month's list, okay? So let's keep an eye on that. So that's a possibility. So I hope you guys see how I went through that process of no, 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 and now this one looks more constructive to me. It obviously has earnings because it's paying dividends. So it's not some fly-by-night company. It trades, several million shares a day. So on a big day, we've got 15 million shares. On an average day, maybe closer to 5 million. So I like that. That one looks to me to be a lot better idea. Let me see if I can find maybe 2 more, and then we'll close up this video. Okay, again. So here's, again, longer term time frame. You can see the downtrend, right? There's no reason to go long on this next stock. Okay. No, so that's a no. Zim, probably a no because of recent selling after earnings. ZYXI, I've traded this before in the past. I don't like it now. They're growing earnings here. It looks like this is in a bottoming pattern. Right here's a bottom, kind of came up, and then it's retesting this bottom. So this could be a possibility, but this stock has burned me before, to be honest. But if we got some major buying over the next month, that could be a consideration. But right now, it's just a watch. Canadian Pacific, which I think is railroad. That does not look good at all. Renewable Energy Corporation. This has been, since April this year, it's just been this back and forth. Made a new high and then just failed to make new highs after that. That's more of just a watch. 4-star looks like it's a new downtrend. Nextel, that looks better, right? So here you can see this long period of consolidation. This thing's been consolidating since basically 2023, and then this would have been, the initial, okay, now this is something to watch. See that big green bar on volume? And then it consolidated for another, since July. This break looks like right over this area. This probably, so we had earnings in November, so that's probably why I wouldn't take this trade, because in November we had earnings. But still, that was a decent setup there after earnings. I probably should have paid more attention to that. I didn't. But now we've got this. Okay, so what do we do with that, right? It's too late to get involved on this one. It's still under a $5 stock, so still considered a penny stock. Do they have earnings per share? No, that's a negative earnings. So they have negative earnings. Again, so this is something to watch. With negative earnings, I would not overcommit a large amount of money to this stock, but this is showing signs that the large players are starting to notice this stock. See that volume? Where it's trading down here and under 100,000 volume, all of a sudden it goes to a 250,000 in volume, and on this day we've got over 300,000 in volume. So this is starting to get noticed for whatever reason. But this was an opportunity here, this consolidation, which I missed. That's okay. So now we're going to look for the next opportunity. We're going to let this play out. We're going to see if it starts to do this up here. If we get a nice long, multi-week, maybe even multi-month consolidation, and we allow price to consolidate over time. Very similar to a retracement where we've got price consolidate over time, which is a price correction, or price can correct through price where you get, some selling. Not a lot of selling, but just some corrective price action. And then maybe it goes sideways, pulls back and then kind of goes sideways around this area or something. So let's watch for this one, NXGL, NXGL to either consolidate through price. Maybe it comes back into this 330 area, 350 area, or does it just go sideways for a period of time? Either of those would be constructive price action to consider along over the next month to 2 months. So that's just one that is definitely going to be on an upgraded watch list for this month, okay? And maybe next week. I don't think much, I'm not sure I can do a whole lot with that this week. It's just too extended, okay? So, but that one I missed because I wasn't paying, it got in my mind that earnings are in November. We'll just watch it next month, and that was an opportunity missed. So there's 2 for you. Let's see if there's anything else. Zedge, I don't know much about them. This looks like, if this could turn up and get over maybe the $4 area, show more buyers stepping up maybe, but right now that's just a watch. Crane next. So what do we have here? This looks somewhat interesting where we had this support. We had this gap up. We had earnings, and then after earnings it was bought up. They paid a dividend, so that's good that they make money to pay a dividend. It's now kind of this somewhat bullish formation where we have a big move up over a couple weeks, and now it pulled back. So if this could get turned around and get over this area, over the 64.5 area, I like CXT Crane next. But that's not the strongest pattern I've seen, but we'll still watch that. I'll watch that for this week or next week. Okay, I'll put that on the list there. Let's see what else we can find. That's 3 halfway decent ones. This one looks better. Rockwell Automation, I like that. Right? It's tested this area repeatedly, and now it's kind of just slowly getting bought up. And you can see, I wish I had my markers on the screen. I don't have them up, but you can just see price tightening up right there, and that kind of into earnings. It's bought into earnings. On where volume doubled, and then it just kind of went up. Now we've got tighter price. Let's look to a smaller chart, daily chart, and see if there's. Yeah, so here's earnings, and it sold off, came back. Now it made a new high. Now we've basically went sideways for a couple of weeks. We just made a new high on Friday. So this week, if this gets over this high, over 304.29, or maybe gaps up slightly, let's say it gaps up to 309, 310, I think I like that one quite a bit. That's a major company, Rockwell Automation. So, and trades generally 900 to 1 million volume, so I like that. So Rockwell Automation. This has that kind of that pattern of, volatility expanded, then it came back, then it expanded, then it made a new high, and then it's kind of pulled back, and now volatility has kind of just went not nearly as much volatility. You can tell that by the size of the candles. If you see these wide range candles. So this looks positive over this area. over 303.92 to 304. So we'll put that on the list. I think that should give you guys enough to look at. You can look at stuff on your own. And we'll keep an eye on those 4. Okay, so I think that'll be enough for this video. I hope you guys had a good year. I will do, again, if you've missed the market this year, I think you've missed a lot. Let's just review that one more time. Let's go back to ETF list. Let's go back to the SPY. The SPY and the Qs, the 2 main indexes, the S&P 500 index. Maybe, in maybe some people's mind, I don't trade Bitcoin, but I clearly missed the boat on Bitcoin, but I don't care. I'll still make money without Bitcoin. So if you've missed something like that, don't chase. That's one of the worst things you can do. But let's look at a 2-year chart. If you've missed this bull run in the S&P 500 over the last 2 years, you've missed a great opportunity. Okay, I'll just put it that way. It's just been a bull market. There's been a pullback here, kind of a pullback here. This was kind of scary at the time back in August. And since then, it's just been back up. Same with the Qs, with the NASDAQ index. There's been buying opportunities along the way, okay? If you didn't take advantage of these buying opportunities, it was for 1 or 2 reasons only. 1, you didn't have money to take advantage of the buying opportunities, which is easily fixed. You save some money for trading and investing. Or 2, you were scared to take that buy setup right there, right? You were scared because fear came into the market. Those are the only 2 reasons why you wouldn't take a buy setup. Or 3rd, maybe you just don't watch the markets. That's the only other reasons I can think of. But if you've missed this 2-year market, you've missed, I believe the NASDAQ's up over 80% in 2 years. And the SPY is up, if I can do this in my head, 381 to 604. Yeah, another probably 75% in 2 years. So start investing now. There's no better time to start investing now. If you want to be a trader, stick around. If you like technical analysis, stick around. Again, this is Philip at the Laptop Trader, and thank you for supporting this channel again this year, and we will see you in January. Bye now.